Hey there, YouTube family. This is Josh with Stocks with Josh, and we are going to take a look at what's going on in these markets. What are the charts showing me, and how is that going to affect our Verb play? You know, I've noticed over the last number of years as different billionaires have been rising on the ranks of richest man in the U.S., that they've always compared it against the fact that Warren Buffett has been going down a notch over time. And I've noticed a lot in my own social media that articles and memes of Warren Buffett have been, coming back to the top. And, it's the day of the dog, man. This guy has collected and done his thing. He stores up cash for the rough market times, for the impending recession. That's when he goes in and he buys some of America's best assets, like Coke and McDonald's and all of the big brands, and he puts in lowball offers on distressed companies, and his name begins to slowly rise to the top of the list. And so we've got to be thinking now, how do we prepare ourselves? Because literally seeing Warren Buffett rise is a signal to us that we've got to take a look at how we're investing our money right now so that it can grow like his is growing. Well, I'm going to take a look at these charts with you, and I'm also going to say, ultimately, we're going to go to how does this affect our Verb play? And, so let's take a minute before we begin, hit that like, subscribe, and the notification bell. Okay, let's go into our charts. So the first thing we're going to look at today is oil. I just wanted you guys to see, as I mentioned to you on Sunday, that not everything is going down. Money is absolutely flowing into commodities. And we're going to take a little bit of time, to understand if the money's going into these type of commodities, and it's coming out of the S&P, the NASDAQ, and the Dow, is it going to continue to flow into these commodities? Is it just going to go higher? And is more money going to come out and go into these staples? I'm just going to go through a number of charts very quickly today, and I'm going to show you what I see. The first thing I want to point out to you guys, we've talked about this in other videos, is this giant wick. That's very bearish, right? And so you can see that as the price drove up into that space, that it began to turn around, right? And it was rejected. So a tall wick on the top of your candle means rejection. That brought it back to a place of consolidation. It was in that time frame that we saw the S&P begin to pull back up. So the S&P was dropping hard until oil began to turn around, and that gave some room for the S&P to go up. So we're going to quickly look through a number of these markets to see how that money is working. So that's a brief overview of oil. Now let's take a look at the dollar, right? Now this is where you really see a story emerging in the US dollar. Believe it or not, the US dollar is still a safe haven. Everybody, I'm a big crypto guy, and the narrative behind crypto and Bitcoin is that cash is trash and Bitcoin is the future, which I believe. I believe that blockchain currency is the future of global currency, and I think it's going to change the way that we do business. But this chart that I just touched on for the US dollar tells a different story. It actually tells you that cash at this moment in time is absolutely still king. And it's bad for the S&P, the NASDAQ, and the Dow when cash is running up like this. Let's go look at Bitcoin real quick. And here we go. This if we were seeing Bitcoin operating as a fiat, as a safe haven to money, we would be way up here in the stratosphere. But instead, we've absolutely come off of our highs. I want to take a minute, and I'm going to show you how all this relates. But let's look at these candles again, okay? When the market was coming down and it flashed down, and you've got this giant tail on the end of the candle, it gave room for a move up, okay? And then the market came down again, and we got two candles here on the bottom with these tails, and again, it signaled a move up. We began to get these wicks on the top of these candles, right? And it gave us this, it signaled this coming downtrend. I'm just going to point out on a number of the major markets that we don't have, what are we missing here? We're missing these tails, which means that we could be looking at a flush down and over this next week or the next couple weeks. I think we're in some dangerous territory. And I think that if we make our plans, we plan out our trades well, this is actually going to help us, even though it seems bearish. So let's look at the next index. So now this is the S&P. And if you guys remember some technicals that I've provided in the past, I talked about how when we had come down to this level and we did a reversal, we came back up, that we were going to have selling pressure right here, which we did. We never broke over that level. And if you remember, I said that for this rally to be validated, we needed it to come back and to test the middle and then move up from there. And that would have validated that rally. But none of that happened. Instead, we've come down, we've gone up, and we've come all the way back down to where we were before, right? And I want to take you guys back a little bit in time and look at two other moments in time in which the market was going under some serious tension. And that's back here. Now, let's zoom in on, or let's just look at this area. So we had come up on these highs, right? And then we rolled over into this area. And then for quite a while, it's what I call a distribution zone. The stock moved like this, guys. It moved basically in between this zone, right? Till eventually it came down to the bottom. And in a very short 2-week period, it flashed heavily down. We got ourselves a nice little tail on the candle. And that simply led us into a reversal. This was the 2018 pullback, and we see something similar here in 2020. In this area, we see again that the market came up to this top where it looked like it couldn't go any further, right? A lot of people were thinking that, that we had come up to the top, that this was done. People were calling for the market to come down. And again, I want to point out that in this zone, we did this consolidation move, right? It came back down and it came back up, but this time it broke up for a number, it gave us another 2 years. Now, I'm just pointing out to you that that's where we're at right now in the S&P. We're having a very similar move right now. We have come up to this place where everybody doesn't think we can go any higher, and we've entered this trading range right here, and we are moving in it, right? And so it is a possibility that we will continue to move in this range, and we could break out from there, and we have to look at that carefully, and we could break down from there, right? Now, I just want to point out that what we're lacking on the S&P right now is one of these indicating candles right here. And we're looking at weekly candles, guys, just so you know. We're taking a longer view. We have this beautiful long tail, which sort of signals that we're going to have a reversal. Now, we don't have that right now. Right now, we have a little bit of a doji, which can also signal a reversal, but it signals a reversal with very little conviction because it's not a lot of volume, right? And so we're definitely in a period of time where nobody quite knows which direction this market's going to go, whether we're going to continue to go up or whether we're going to continue, go sideways or whether we're going to go down. I'm wanting to point out to you that people are moving their money around. Cash and oil are at all-time, they're very close to all-time highs, and the NASDAQ and the S&P and the Dow are sitting at a range, okay? So how does apply to Verb? We're going to get there in just a minute. I'm going to show you guys one more thing, and that's the NASDAQ. So the NASDAQ is where Verb trades, and I'm going to point out to you why I'm going through this specifically. But again, if you see here that when we got into this range where we got these large wicks on these weekly candles, it told us that there was interest and buyers at this level, and it shot the stock up. Then we came into this zone, which was sort of a a zone that I pointed out to you guys on Technical Tuesdays, where we have these tall wicks again on the tops of these candles, which means that we're getting buying pressure. That pushed us back down. What are we missing again on the bottom of our candle? We're missing that flush, that tail, and the rise of volume into the charts. So I just wanted to show you all of those charts and give you an overview of what we're looking for as far as confirmation. And also, I think that in those charts, there is a lack of conviction for an upward move at this moment, right? Which could mean that we are going to face a volatile period of time. It could be a strong flush down. And at that point, we're going to look for that volume to come up. So I'm sharing all this because it's an explanation of why I'm telling you to be patient on the Verb, okay? Verb went up today to 65, 66 cents. I know people are thinking they've missed this. I see it in the comments section. Oh man, catch you on the next small account challenge. Listen, nothing has even happened yet. Our first order hasn't gone through. If you're watching the video, you've got to just make a decision, you know, instead of being like a observer or a looky-loo. Oh, what are these guys doing over here? You got to make a decision, you know. Am I going to jump on board, and am I going to participate, and am I going to give it my all, and am I going to learn? So, you know, I'm only saying that because I see there's a lot of people who are just communicating uncertainty, like they missed the boat. You haven't missed anything. I'm literally showing you how I'm tracking the trade. The link to moomoo is in the description of the video. Go ahead and download it. You can fund it, and in a day you can put your limit order in, and it's going to give you the time that you need for the price to come down to where we want it to come. Obviously, I don't know. I don't have a crystal ball, but I'm showing you how I'm reading the charts, and you guys can see why I think what I think. Okay. I'm going to take you guys into just a couple things I think are noteworthy for Verb that I want to share with you so that you guys become more familiar. This would be the fundamentals. It's a news story and also a price prediction for the stock. So Verb Market Platform now supports secure sales of NFTs built on blockchain technology through live stream shopping events. Verb continues to expand its addressable market by enabling creators to use Market's live stream sales platform to sell non-fungible tokens built on blockchain technology. So this was one of the most impressive steps that I've seen in Verb, is getting themselves relevant to where really everything is going. The markets and marketplaces are going towards NFTs and towards the metaverse. And you know, these guys are not part of the old archaic sales path. These guys are on the absolute cutting edge of crypto as well as modern selling. So just wanted to point that out to you. I think that's a great article. I also want to show you a price prediction for Verb. So really we have not a lot of analysts are covering it right now because it is still new. But the average price prediction for Verb is $3.42. The lowest price prediction on Verb is $2.25, and the highest is $5. I mean, you can obviously see that this is, and it's trading at 65 cents. Now, this does not mean to go out and load up the truck with Verb. I'm wanting you guys to see the pros and the cons. This is part of it. You have to have a bullish view and a bearish view, and then some sense of what's happening with the charts. So I wanted to give you the bullish view. They're moving with NFTs. I wanted to, price predictions are upwards to $2, $3, and $5. So it's not crazy of us to buy this at 65 cents. But now let's talk about the charts on Verb and a bearish view. Verb, the volume on Verb is terrible. It's so low. I actually believe that just our buying it alone as a small community, we're market makers. It's possible that some of you guys who are putting in market orders have actually been causing the price to rise. What we're doing with Verb is we are positioning ourselves and acquiring at a range that largely it shouldn't be affected by us. It should be affected by large other buyers coming in to pick up a piece of this company. So I'm going to take us now into Verb, and we're going to kind of get caught up there. Okay. All right. So, charting, is new to a lot of you. And I want to do my very best to keep it super simple so that you guys can, feel comfortable and begin to pick this up yourselves. In the last week, I showed you how I drew my support lines here, as well as my line of resistance. I want to point out something to you, and I've drawn this little squibble here, which illustrates the move in the channel. Okay, so from the bottom of the range to the top of the range, right, we see that it's moved there a couple times. This time going up, this time going down, this time going up. And so we have to ask ourselves, where is this likely to move? Now, I've mentioned to you before that I believe that we're going to face a lot of resistance at this 98 cents level. Okay, so this is an area that had previously been support for a long time, and now it's resistance. And so the question is Verb, if Verb even popped up from here, would it go all the way through 98 and go to the top of the range up to $1.20? That's possible. Or is it possible that we're going to continue to see Verb come down, right? Again, all the way to our 36 cents, right? That's the all-time low. Are we in an environment in stocks where these type of assets, regardless of how good they are, can reach their all-time low? And the answer to that is yes. And it would make a lot of sense that if we did come all the way back to our all-time low, it would make a lot of sense that when it pumped, that it would pump the distance of our move and come to a potential halt at that top of the range of 98 cents. It's going to take some time, likely, for it to move in this range, right? It's going to take some time for it to break out of that 98 cents. And so I'm sharing this with you guys to say that you haven't missed the trade. Matter of fact, we could be early. We don't want to change our limit orders. We want to see where this goes. Obviously, I don't have a crystal ball. If it ever takes off from where we're at, we will go and I will show you how we'll interpret that move. But I actually think that we have to acquire, to be successful on this small account challenge, we have to acquire our first 100 under 60 cents, right? And the way that I view it is that we're going to dollar cost average at 60, 50, and 40. That's the potential. So I want you to begin to think along that line. All right, so hey, that's going to be our video for today. Please hit that like, subscribe, and that notification bell before tuning out. And I'm going to do a quick follow-up video directly after this one that's going to show the 3 trades that we're going to ultimately do. Thank you guys for letting me be part of your financial journey, and I'll see you in the next video.